What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, we are back with everyone's favorite series, crazy Wall Street bets that have happened over the last week in the market. So if you are excited for today's video, make sure that you like the video, subscribe to the channel, and as always, turn on the bell notifications for all future uploads. We are back in school, by the way, so the uploading schedule has been a little bit off here, so hopefully you are still tuning in for these absolutely outstanding videos. All this financial content free of charge, of course. And boy, do we have another great episode on hand for you guys today. We're going to jump right into it. But again, remember, all this is anonymous, and the point behind it is to bring education to it, not to, call someone stupid, call someone moronic. It's just all anonymous and to bring financial education to you. So jumping into the first one, we have somebody here that posted their expectations versus reality. And again, this is something that's very well known and very important to understand here, is that just because somebody posts that they're up 300% in the last 3 months, which is absolutely insane for a return, this person is still down to 50% year to date, and they are also down 77% all time, starting with $100,000 here. So always be mindful when it comes to watching people online and posting things online, that just because they post something that's up 300% or up 100%, you never know what could actually happen. This is the reality of trading and the reality of gambling if you are not doing your educational aspects of things. You're not doing your due diligence, and you are being risky with your investments. So just things to keep in mind about to kind of start off today's episode here. I appreciate this person right here for being so transparent, not only for the 3 months, but for the year to date, and then also for the all time. So shout out to you for your full transparency, because these are the people who I like to see what they're actually doing here, and they're not hiding it. They could have just stopped at this picture right here, and they decided to show the full portfolio returns, which is, honesty hour, right? What we're all about here on the Fridge Financials channel. Going on to the next one here, we have somebody who wrote, "I'm cooked," and he bought a lot of NVIDIA call options. Now, if you're not familiar, last week, at the time of recording this, NVIDIA had their earnings last Wednesday after hours, and they were beats across the board, but the stock still came down after hours and into the next day. So this person bought $30,000 worth of options for call options for NVIDIA, and they are going to expire, or they probably expired worthless at the time of recording this. Again, the thing that you people need to understand when you're buying options is you need to give the option time. He only had 10 days for expiration, which is more of like a little over a week in, the trading time here for NVIDIA to make its move here. So you got to be mindful of these kind of trades with options, especially around earnings. If you bought a deeper call option, like a farther out one, you wouldn't lose nearly as much value in this case here. Maybe you wouldn't have had 50 contracts. You could have had maybe like 10 contracts for $30,000 total, but it would have given yourself a lot more time for the option to move in your favor. Options with short-term expiration dates, like, again, this is about 10 days out here, are very, very risky. So just another learning experience. Remember here, again, buying those farther outdated options is going to make it a little bit better for you as you go. This person put in 30 grand and he probably lost all of it. I would have at least taken out the $100. So at least you can have $100 to your name still, but I don't know what happened after that. And again, earnings are a risky play here. This person right here, positive, is spelled positive wrong. I just realized that. Positive affirmation, YOLO, and Affirm. Now, Affirm, this person made over $100,000 on Affirm. Affirm had their earnings also earlier last week, or later, I said a couple days ago, actually. And the difference with this person is that he actually had shares. So thank God he had shares and not just options itself, because obviously shares means that you don't have to have it move to a certain price by an expiration date here. But this person here had 13,000 shares of Affirm, over $1 million worth, and it paid off nicely. Now, I will say, that Affirm is a very top quality company in terms of what it's going to do. If we're looking at potential rate cuts here in the market here, that means our economy is slowing down. If the economy is slowing down, people still got to pay for groceries and things of that nature. And Affirm is that one of those buy now, pay laters they look at, So if people still got to spend money to, buy necessities and stuff like that, they might be doing Affirming. buy now, pay laters, and they're going to make some money on it. When the economy starts to get stimulated again and more money comes back into the economy, more people are more optimistic. Same thing, a firm's going to do very, very well as well. So they had really good earnings overall. This person right here put $1 million into this stock in itself. Now, we don't know if that's his whole full portfolio. We have no idea. It's just titled as a YOLO. But, hey, credit to you, man, making over $100,000, $150,000 profit on a firm with 13,000 shares is absolutely amazing. Moving on to the next one. Thanks, Iron. $440,000 gain this person made. Iron, I believe, is a new-ish company that's been on people's radars for AI software and stuff like that. Not really too familiar with them, but they did have their earnings as well, and they had a nice beat, I believe, on their earnings and some good guidance. So what we're looking at is this person right here made over $400,000. Can't complain, honestly. But, this person obviously bought call options here, as you can see. So they are now going to be worth a lot more money here. But at least this person, he staggered out the options here, which is very, very smart actually to think about. Having it be August 29th, which was yesterday, and having these also go into September means that, these have a little bit more time to get some more premium for it. These ones obviously expired, so hopefully you close these ones out for a nice profit. But staggering your strike prices isn't a bad move to do as a result of this. So very, very nice call out here, making over $400,000 so far and counting. But it's 414,000 he's up right now. There's probably some more, I'm guessing, on the next page that I didn't look at, but making over 440,000. Absolutely amazing. I got to look into this company here and see what they're all about because there is some hype behind this company. So I want to do some little bit of research and see what it is and if I like it or if I don't like it. Who knows, honestly. Moving on to the next one. I love this one. This has nothing to do with a stock itself, but this person made a Duolingo post. I'm erasing wealth with 98% accuracy. I thought this was absolutely amazing. Words I learned: 0 DTE, margin call, liquidated, full ported, YOLO, and put call. Oh, man, I love Wall Street Bets for these kind of humor things. A little bit of a humor put into here. Absolutely amazing. Duolingo is doing a very good job as a company, I will say overall. But this right here is absolutely hysterical, and I absolutely love it. So shout out to whoever made this meme here. I think it's absolutely hysterical. Nice little break in these trades here. Look at the next one. This person put $218,000 into SoundHound. Now, I am a huge fan of SoundHound and their technology and their partnership and stuff like that. Would I ever full pour 100%, $200,000 into it? No, I would not. But he's got 17,000 shares at $12.60 here. So he's looking to make some really good money here, hopefully, as it hopefully gets a rebound. It pulled back from about $16-ish, and now it's back down to $12. So the full port, though, is crazy to me. If you wanted to be super, if you're really bullish on it, maybe do 50% of your portfolio, make it $100,000. Then keep 50% to the S&P 500 or something like that. Diversify a little bit. But since at least he owns these shares, at least sell covered calls. $50 strike prices, $20 strike prices, something to kind of hedge your portfolio. Just because you never know with SoundHound. The problem right now with SoundHound, they're not a profitable company yet. They're getting there, but they're not quite profitable. So still a riskier asset because if they're losing money more than they're making money, could they sustain that for much longer? Obviously, only time will tell, but they are a company that I have liked watching grow on their earnings reports. They are doing some really good things, but a very risky play you got going on here. $200,000, 100% portfolio invested into this. And again, I would just sell covered calls, get some cash on the side while you wait for this to do what you want it to do, hopefully. So good luck to this person with SoundHound AI. Going on to the next one. This right here, make fun of me part 2, sad face. He bought 350 call options on NVIDIA that expire April of next year. So April 17th, 2026. He's looking for NVIDIA to hit $320 by April of next year. Right now, it's at about half of that. He's basically making this bet that the hope would be that NVIDIA could somewhat climb closer to $300-ish mark or so by April of next year. That's very, very optimistic, let me tell you. That is a very, very optimistic trade that you're doing here. Could it work out? Absolutely. Was this open before earnings? Probably. I wouldn't doubt it if it was. But the thing to keep in mind about is that when you're choosing your strike prices for call options, you got to be mindful of what you're looking at here. This person right here, again, NVIDIA's around like 170, maybe like, I don't even know what it is at this point, but you're looking at almost a 100% upside return between now and April. So you're looking at, about 8 months for a 100% return on NVIDIA. I just don't see that happening anytime soon whatsoever. The only way I could see that is this huge market rally is I know that yesterday the appeals court said a lot of the tariffs that were being implemented were illegal. So if tariffs get pulled back off the table across the board, that might push this economy higher and maybe you get that. But $303 call options for April of next year to me is just way too crazy. I like to be more of that person who buys deep in the money ones. So like buying like a $140 call option. Yes, it costs a lot more, but you don't have to bank on as much upside from the stock here. So, fingers crossed this works out for this individual here. But again, 320 strike price for April. I don't know. If it was 2027, maybe, because, it's 100% upside you're looking at for NVIDIA still. Only time will tell, obviously, as we see. And maybe we come back and he actually was correct. Who knows, obviously, right? Moving on to the next one here. We have this person here. Now, this one I put up here because it kind of goes off of the first guy or girl's post on Wall Street Bets that I put up here earlier in this video. He said he went from $300 to $49,000 since July 7th, which you'll see. So he went from $300. He's up $48,000 at the time of these screenshots here from July 7th till August 28th. Now, kudos to him. 12,000% return is absolutely ridiculous. But here's where my question really is, and I put this up for a reason. Look at what happened first. Okay, just keep in mind. Look at this drop. I don't know how much we started off with. I'm guessing this is like $30-something thousand. And he went all the way down to like $300, then crawled his way back up. Yes, he made a crap ton of money on the upside here. But in taking a look at what we're focusing on here, the fact that this drop happened, to me, makes me feel like it could be some very risky trades that did pay off for now. But is he going to be able to sustain this long term? That's my only concern, because people will post these things like, oh, look, I'm up 13,000%. Yes, but what risky trades put you down to $300 from like the 30,000 that you were at to begin with? Then you made it all back, which is amazing. But what happened to bring this down here? So that's just always my mindset to think about. If it was a consistent upward trend, like say he only put in $300 and it was just nonstop increases, then sure. Like if he started off with $300 and it rose up, I'd be like, dude, this guy's amazing. But the fact that you started with 30,000 and it came all the way down, I would love to know what that trade was that brought him down and what trades they were that brought him back up. He did show some options on one of these tabs here, but I'm just wondering what brought him all the way down to $300 from like 30 grand. So just something to keep in mind about when you're seeing these posts on Wall Street Bets as per usual. Moving on to the next one. Managed to actually hold leaps long enough for one to get to long-term gains. This person right here bought like $20,000-ish of SoFi Leap call options here. So he bought $10 SoFi options back in August of 2024. So a year out, and they don't expire till June of next year. His break even is $12, and right now they're sitting at like it's at like $27 a share right now, $26 almost a share. It's absolutely unbelievable. This is what we say where buying leap options gives your stock so much time to move in the direction that you want it to. The fact that he bought this over a year ago for $20,000 and he's up over $140,000 because he bought it almost 2 years out in advance. These leap options are where you can make a lot of your money here as you go. So shout out to this guy right here. Absolutely love it. He's been holding it the entire time, and hopefully he's able to, close it out at some point, make some good profit here. But this this is the way to look at buying options. If you're buying options, put a longer expiration date. Give yourself time in the market for the stock to move in the way that you want it to. So shout out to this guy right here, making over 600%. Absolutely amazing. I love this one. Never listening to Wall Street Bets again. Ironically enough, it's on a Wall Street Bets forum, obviously. And this is why you still listen to Fringe Financials when we cover these kind of things here, right? So this person bought $5 open door call options here. And yeah, and the problem that I see right away is well, not really multiple ones, but the big problem here, bought on the 27th, expired on the 29th. You were giving yourself 2 days for the stock to do something. Yeah, don't do that. Okay. Again, if you bought these for a farther out date of time, like maybe January, February next year, then this wouldn't be as much of a loss. But the fact that this is just a pure gamble risk trade that you're looking at right here, and that doesn't work out because as soon as Open Door sells off, which it did, it went down to $4 on Friday because the whole economy kind of sold off because of inflation data and stuff a little bit. You lose all your money. It's gone. Woof, in the wind, right? So things to keep in mind about is that you got to go farther out in these options plays here. If you're going to play options, take the longer term. Yes, you don't get those big quick hit making $10,000, but you don't have this as much risk of losing value here. Now, can Open Door be profitable in the short term? It could be. Still a meme play, in my opinion, but with the ideas of rate cuts on the table, Open Door focuses on real estate. Rate cuts are going to be beneficial for real estate because you can borrow money cheaper, so you can go out and buy housing and stuff like that. You can refinance. So Open Door might actually benefit from this rate cut here. So that's why you kind of saw that rally happening because of the rate cuts from Jerome Powell that was talked about at Jackson Hole last week. So things to keep in mind about, again, Open Door could do well here, but this dude should have put some longer dated expiration on it. Maybe January, maybe February, even next year, a year out for these ones. You don't buy as many contracts, but you don't lose as much money in the long term. Moving on to the next one. This is summarizes how earnings work. Okay. NVIDIA beat all their estimates, down 4% after hours. It doesn't matter what their numbers come in at. What matters is guidance, and what matters is what does Wall Street look for. Wall Street could be looking for a bigger beat than what it came out with, and that's why we got that sell-off period of 4% after hours, right? So things to keep in mind about with earnings, you could have the most unbelievable earnings across the board, beat everywhere, top line, bottom line, everything. But if Wall Street doesn't like the numbers you put up still, you still come down 4%, just like NVIDIA did. So things to keep in mind about with earnings. Again, earnings are a really, really risky play. You could also have the inverse where NVIDIA could miss on every single thing possible and somehow it goes up, 5-10% because of their guidance or whatever the case is. You just do not ever know with earnings. So I put this one in here because, yes, NVIDIA beat all their earnings and they beat their estimates, but they were still down 4% after hours because Wall Street wanted more. Wall Street is greedy. They want more higher values. And they didn't get it, so they sold it off as a result. Gambling $150K on Out of the Money Spotify weeklies. Now, I could be wrong, but I'm pretty sure in one of my videos doing this, someone did Spotify earnings call options and lost like $100K. This person put in $150,000 and he's down about $15K right now at the time of recording this. Now, I'm not sure quite what the Spotify option is trading at right now. So I'm not sure if these actually became profitable or not, but he was down about 15 grand at one point. I'm not sure if he closed these out or not. I have no clue. But again, these YOLO plays and playing weekly call options is just never a good idea. You want to do farther dated ones. Honestly, I cannot say it enough. The farther date, yes, it costs more money, but it gives you time to make money, right? That's what we're all here for. We're not here to be risky gamblers. So I don't know if these played out. I have no idea, but it's risky. That's why I do these videos every week. Wall Street Bets has a lot of risky plays here, so you got to be mindful if you are on this forum, obviously, and following trades from people on Wall Street Bets. Oh, I felt like I was back in 2020 when I saw this one. We have $190,000. This is cut off a little bit here. This is $190,000 up here somewhere, so sorry, I apologize. $190,000 earnings YOLO on GameStop. Like, that's insane. and he's down 40 grand. And GameStop is sitting at $22 a share right now. It's like 2020 all over again with the short squeezes from GameStop and AMC. Oh my goodness gracious. The fact that you're willing to put in $190,000 into GameStop, which is, one of those, companies that hasn't really been doing much in terms of other companies you could put that money into, is crazy. And again, these are options here. He only has till September 12th. So looking at about 2 weeks after today, or at the time of recording this. 2 weeks. Earnings came out, sold off. It's sitting at $22 a share right now. You need it to move up, $3 or $3 and some change between now and the next 2 weeks, which a $3 move, you're looking at over a 10% upside. Yeah. Oh boy, oh boy, oh boy. I felt like I was back. I felt like I time traveled to this one a little bit here. So, hopefully this works out as we know here. But oh my goodness, he bought these back in August 7th too, which is crazy. So I wonder if they were ever profitable and then earnings came out and they were awful. I have no idea. Moving on to this next one here. I've never even heard of Doma before, but this person, man, credit to you. He made 120 G's on this one. But the good thing is he bought shares and not options. So shout out to this guy. He's got 15,000 shares at $8 a share. And believe it or not, only 16% portfolio. So he didn't full port YOLO it. He's got easily, a over, like a $2 million portfolio here at least. And it's absolutely amazing. He bought shares. Maybe he sold some call options to kind of get some passive income here. 15,000 shares is absolutely amazing. But it's a company he probably did some good research and some good, due diligence on. And as a result, he made 120 G's on it. So he almost doubled his portfolio or his investment here, which is absolutely awesome. Shout out to you, man, whoever you are. Absolutely love it. And again, I love that the diversity is very, very slim. 16% of your portfolio, that's literally nothing. It's not like it's 100%. So shout out to you. Absolutely love this one. And last but not least, Google antitrust YOLO. Again, at least he bought shares of Google, it seems like, for $450,000. He's up about 22 grand already. But again, it's a big YOLO here because he's got 91% portfolio diversity. Not sure if Google's going through some sort of antitrust lawsuit. I have no idea where this comes from, but it looks like he's banking on them to do relatively well after the antitrust news probably goes away. I don't know if it's like a lawsuit. I have no idea, but thankfully this dude at least bought shares. Okay. Shout out to you for buying shares. Again, you can still cover calls in the meantime if you want to, whatever the case is, and you can still make some money in the long term. So that is it for this week in Wall Street Bets. Again, some crazy option plays here with NVIDIA, GameStop, all those different ones there. But I love that I'm seeing also people share their portfolios where they're buying shares. Because buying shares, obviously, you don't lose money when you buy shares until you actually sell off the shares. Options, you only have a certain timeline for. So if the options expire, then you lose that money and that's it. With shares, like Google isn't going to go to zero anytime soon whatsoever. So buying shares in Google definitely is not a bad play. Would I say do 91% of your portfolio into it? Probably not. But, at least you're buying into a company that's going to be around for many, many years, I feel, at this point in time. And, he could just sell options against it for some passive income as we go. And as the years go on, he could play more and more. I think it's going to be a great trade for him long term, as long as he manages it carefully and everything else. So thank you guys so much for watching today's video. Again, if you made it this far in the video, make sure that you smash the thumbs up button, subscribe to the channel, and as always, turn on those bell notifications for all future uploads. We hope we're making money in the markets as per usual. And thank you guys for tuning in to another Wall Street Bets. And as always, I will catch you guys in the next video.